the reason that so many wealthy people invest into real estate is because depreciation. Depreciation is king when it comes to taxes, whether it be a vehicle, a property. There's a lot of benefit with depreciation as a whole. But as far as just low hanging fruit is concerned, ask yourself, when you spend a dollar, is it ordinary, necessary, helpful, or appropriate for you to generate income?
Hey guys, my name is Julian Castle and I'm with the Real Estate Investors Group. We have 184,000 members and a big email list, and we'd love to help real estate investors like you. And today I got the president of Private Corporate Services, Tommy Thornburgh, and he has helped over 150,000 businesses get set up. Can you tell us a little bit more about that, Tommy?
Yeah, of course. Thank you so much for having me. First of all, I'm excited about this. Real estate is one of our expertise, so this is right up our alley. We actually filed 50. We're coming right up on the deadline. We filed 50,000 tax forms this year. It was a record for us. But yeah, a little bit of background. We were founded in 2012. Steve Harward, my partner, is the CEO. I'm the president, like you said. And when we first started Prime, it was mainly to just help entrepreneurs understand how to navigate the waters in regards to legal structure and tax minimization. And being in business for 12, almost 13 years now, we've had the luxury of working with a lot of different industries, online businesses, stock investors, like I said, a lot of real estate investors. But our whole mission and our entire goal is to help make sure that you're protected through entity structuring and estate planning, and help you understand how to grow through business credit development and tax minimization. So that's a little bit about the company. And once again, thank you. I'm excited about this.
Awesome, Tommy. Thank you so much. It's a great breakthrough to hit those numbers. I mean, that's no small feat. You're so yeah. I want to get into it, because real estate investors, they always have to form entities, to do business, and so I just want to get down to it. So, like, what is a business entity, and why is it important for a real estate investor to use one?
Yeah, this is a great question. I would say this is actually one of the most common questions that we get, especially from early staged entrepreneurs or real estate investors. When should I structure a business, and how should I structure a business? I mean, at the end of the day, an entity is a person or a business that is operating with the intention to generate income. So setting up a
Mhm.
business entity can be an LLC, it can be a corporation, it can be an LLC taxed as a corporation. And what I tell people is there's no tax code that says you have to be great at business, but there is a tax code that says as long as you show the intent, you can take business related deductions. So privacy and protection, tax benefits, and credibility. Show yourself as a legitimate business, not only to your clientele, but to banks and lenders as well.
Mhm. Okay, that's great. Love it. So I want to talk a little bit about what the difference is between an LLC, a corporation, a sole proprietorship for real estate investments. How do they impact how I manage my properties and all that?
Sure. Yeah. I mean, very biased opinion here. I mean, I'm a real estate investor myself. I'll start by
Hmm.
saying that and just say that I can speak from a lot of my experiences. I currently own 78 doors of real estate right now with where it
Wow.
stands. And I love LLCs. And the reason that I love LLCs is because of the flexibility that they offer. So, sole proprietorships, LLCs, S corporations, they function pretty similarly in the sense that they flow through on your tax return. So, what I mean by that is if you have a W 2 and you're just getting into real estate, having an LLC is nice because you can still show startup expenses and organizational expenses, but it separates the two. It gives you protection to separate it from yourself as a personal entity. So, I love LLCs. it allows you the ability to identify the type of income that you're generating. So, for example, if you are wholesaling or if you're fix and flipping, in most scenarios, that is going to be looked at as active income. And it's the
Mm-hmm.
highest tax rate. It's active income is 10 to 37% currently, right?
Mm-hmm.
That's where we want to take a lot of the deductions to lower the tax liability. That's
Mm-hmm.
where we also would want to be able to change the LLC so that it's taxed as an S Corp. And that allows you to pay a salary and a distribution and avoid half the self employment tax. But LLCs on passive income, they're not subject to self employment tax. So a lot of times LLCs will give you a little bit more flexibility to make changes as you need based off of the revenue that you're generating.
Okay, love it, love it. That's amazing. So yeah, I did want to touch into that specific case because there is a lot of different kind of people inside my group, a lot of verticals. So I did want to touch in, which business entity should I choose if I'm wholesaling, flipping, holding rental properties, and just basically how they differ in terms of liability, and all that.
Yeah, it's a great question. So I mean, what you said there in regards to liability, it's a sue happy world that we're living in, right? It's over 40 million lawsuits a year. There's a website that had clarified it's about 76 lawsuits filed a minute on average, which is just absolutely insane. And the more successful you become, the larger the target on your back becomes. However, one of my favorite mentors, someone that's been a big impact to my personal and my business life, he said, "What I love about what you guys do at Prime Corporate is you get to help people understand it's not if you get sued, but when you get sued." And I'm not an attorney. I've got a full team of them that work here. But I can tell you right now, there's plenty of horror stories that we could share. And I'm a walking example. I found myself in my first lawsuit at 22 years old when I purchased my first investment property. So
Wow.
a lot of it is just learning. It was my fault. It was a breach of contract. I didn't go through the review process that I should have, the proper due diligence on the property because I knew, like, and trusted the builder. So asset protection is something that for peace of mind should always be set up properly so that it's not if you get sued, it's when you get sued. And business entities are a great way to mitigate that risk.
Okay, wonderful, wonderful. So yeah, I mean that's incredible because obviously these lawsuits do happen, and a lot of the people once they get to further along their journey, they're like focused on protecting what they've had. It's a lot harder to lose what you have than to gain something. So to lose something like an extra gain. So anyway, so
Yeah.
I just wanted to ask you, how does forming an entity protect myself from that personal liability if something goes wrong with the property I own?
Yeah, so this goes back to the entity question. You as a person are an entity, and I like to explain it in this way. As an individual, everyone has worked really hard to identify who they are currently, no matter where you are in your life. You have bank accounts, you have personal homes, you have retirement accounts. You've had struggles personally that you've overcome, and you have things that you're still working through. And if you think about it that way, where you yourself are an entity, you're a person that's overcome a lot of obstacles. Do the same thing for the business. Personal is personal, business is business. And how do you separate those two? The way that you do it is by setting up some sort of an entity, whether it's an LLC, a corporation, a trust. And the reason that a lot of people, I think, struggle with what entity is best and why is because it's not one size fits all. When you told me earlier that you have people in a lot of different avenues, as I mentioned, active income like wholesaling and fix and flipping is different than rental properties that are passive income and lower tax rates. So let's identify who you are, what you have from a real estate standpoint, and what your goals are. because it makes it a lot easier to draw out the blueprint on it's not about where you are right now, it's where you're going to be in 1 year, 5 year, 10 year. And if we need to clean up what you already have, or if we need to focus on where you're going, having entities in place will separate that liability so it doesn't commingle with your personal assets that you've worked very hard for.
Okay, awesome. I love how you're separating people into active and passive, and that's great. Everyone is different in their journey, so that is a very important thing. So let's move on to taxes. Everyone gets taxed. One thing, two things are for certain: you're gonna die, and you're gonna pay taxes. So
Benjamin
um,
Franklin.
that's right. So what are the key deductions available for real estate investors, and how do they help lower the taxes I pay or they pay?
Hey, now we're talking. Now we're talking. Asset protection's important. Not my favorite topic, full transparency. Tax savings, on the other hand, oh my word, I love it. And here's why. Everyone wants to make more money.
Hmm.
Everyone wants the title. Everyone wants the money. And my partner Steve and I, we kind of joke about this. We have 350 employees, and we always tell people everyone wants more recognition, more title, more money. Not everyone wants the work. And when it comes to taxes, it's making 10,000 more dollars is the same as saving 10,000 more dollars. But what
Hmm.
if you can do both? Go generate that revenue and save that additional money so that you can compound. And that's what creates wealth. The reason that so many wealthy people invest into real estate is because depreciation. Depreciation is king when it comes to taxes, whether it be a vehicle, a property. There's a lot of benefit with depreciation as a whole. But as far as just low hanging fruit is concerned, ask yourself, when you spend a dollar, is it ordinary, necessary, helpful, or appropriate for you to generate income? If you can connect those dollars back to your business, things like your phone, your internet, your power, portions of your rent or your mortgage, if you have a designated home office, marketing spends, branding yourself, websites, emails, all of those things are business related expenses that will help you generate income in the future. That it's one of the most important things you can do tax wise is track your expenses. Have an Excel spreadsheet, have QuickBooks, use one designated credit card, get something that will allow you to track your expenses so that in the fourth quarter you can go on a business shopping spree. The 78 doors that I own, I've bought about 60 of them in the months of November and December because I know what my profit and loss is. And I realize that if I buy real estate, I can depreciate it to save money in taxes to create cash flow for the future. So knowledge is power, not only with your books, but with everything that you've learned along the way for anyone listening in your real estate journey as well.
Gotcha. Well, let's talk a little bit more about depreciation because you wait until November and December and you go on a shopping spree. But why? Why do you go on a shopping spree? Why? You know.
Yeah, this is good. So a good rule of thumb, break your year up into months or quarters at the very least. And the reason that I say that is because when you break it up into quarters, January, February, March is quarter one, so on and so forth. October, November, December is when you have the ability to make investments that will impact your future. If you're a person that waits until February, March, April to just put your tax documents together and get them to preparers, it's reactive planning. So that's a lot of what we focus on here at Prime.
Mhm.
How do you become proactive as opposed to reactive when it comes to tax planning? And October 1st, or whenever it is that you're listening to this, I would love for all of you to know how much you made at a W 2, how much you made with your real estate or your self employment journey, and how much you've spent, because it'll give you a number. Let's call it $50,000 left in profit, just for really easy math. you can now understand how much you're going to pay in taxes. So now you can make decisions on buy the laptop, buy the computer, invest in the marketing campaign. And if you don't know what your numbers are, it feels like you're playing a game of roulette on whether or not you're making proper decisions. Um, I, I've made a lot of mistakes. I've done a lot of things that I shouldn't have done that I've been able to learn from. And one of them, I had a really good friend call me at the end of December a couple of years ago and said, Tommy, you're always looking for taxes. Give me $100,000 and I'll give you 33% of a fourplex. And here's all the details. So I asked myself, will this benefit me? And I knew it'd save me about $50,000 or $60,000 in taxes. I did it. I haven't seen a dollar back from that investment. It's been 2 or 3 years. So this was a really good friend. I give him a hard time all the time. Don't get me wrong. However, I'm
Hmm.
not overly upset because it saved me money in taxes. It's an asset. Was it a good investment? No, it wasn't. I'll be the first to admit it. But it at least gives me the opportunity to make decisions that I can sleep at night knowing the intentions were there. I did the math on the numbers. It saved me money in taxes. Hopefully, I can sell and get out of this deal at some point. But it's a good example of knowledge is power, even when it comes to your numbers, right?
Yeah, yeah, absolutely. That makes sense. I like how you put that. Saving is just as making, more income. So I love that. Um, and and so I really want to get into a little bit more of taxes because I know that there's something that's called a real estate professional status, right?
Yeah. Yep.
And I know that, a lot of people don't know what that is or don't know if they qualify, but I know that it's a big impact to the bottom line. And I want you to explain it to them and see if they can,
Yes.
you know, work their way up there, to do that.
I love it. Real estate professional status is for real estate investors, it's one of the most powerful tools that you have within the tax code. And the reason for it is it takes the cap off of what you're able to deduct when it comes to depreciation. So if you're not a real estate professional, that's okay. You can still take deductions, but a lot of times there's limitations around $25,000 and it changes every year. But once again, I'm just going to use myself as the example because I could go on and on about clients, but it's easier for me to talk about my situation. About 3 or 4 years ago, my wife got her real estate license, and she is a real estate professional. I went to an event in Hawaii a couple years ago, and someone said, how many of you have a W 2 with healthcare? About half the room raised their hand. How many of you are real estate professionals? Other half. He said, you guys should get married. That'd be a good idea. And here's why.
Hmm.
And
Uh,
the reason for it is because it takes the cap off of the depreciation. So it has to be over 50% of your actual income. It's got to be 750 hours a year of real estate related activity, which is pretty easy. It's about 14, 15 hours a week. It needs to be your primary income. But if you qualify for real estate status, you know. And if you don't know, make sure you talk to a professional, you talk to an accountant. Those are things that we can help you with. We also have really cool organizers that can help you track your time to know if you're hitting the 750 hours. But the point of that, and my entire message here is buying real estate is a very easy way for my wife and I to take real estate depreciation through cost seg studies, accelerating
mm,
depreciations, and lowering tax liability against my income and against her income as a real estate professional. So, very, very powerful tool. It's a great thing to work towards if you don't have it currently, but it's one of the best tax codes, in my opinion, is that real estate professional status.
okay, okay, that's great. Well, let's talk about the cost segregations and the accelerated
Sure.
depreciation. Um, I know that it was great back once upon a time. It has been going down. but there's still the ability to take part. Can you tell us about what's going on and how can someone take part who is still able to?
Yeah, so when you buy traditionally a single family home, right, or real estate in general, it's usually going to be broken up over 27 and a half years of depreciation or 39 years of depreciation. And that's a standard schedule. Still very beneficial. It's still amazing to be able to have those depreciations. But what we're talking about with cost segregation studies is accelerated depreciation. So, an example of that is this year for 2024, the accelerated depreciation amount is 60%. And next year, it's supposed to drop to 40%. Just recently, in the last month, it went through Congress, it's waiting on the Senate, or vice versa. And they were trying to get it back to 100%, but it got denied. So there
Mm,
are tax codes every year that change on an annual basis. Last year, they called them the Inflation Act adjustments. I about fell out of my chair when they admitted there was inflation. But a good example is this accelerated depreciation is truly a benefit. And this is where on TikTok and Instagram you see people telling you to buy a G wagon and a Range Rover. It falls into a
mm,
similar category. But when we're talking about real estate, it breaks it up into 5, 7, and 15-year depreciation schedules. As an example, we have a lot of clients that have bought a lot of storage units. Storage units are great. The asphalt becomes a depreciable asset. The light posts become depreciable assets. A When you buy a single family home, the carpet, the cupboards, the light fixtures, they're not going to last 27 and a half years. It's not going to happen. So when you run these studies of cost segregations, it allows you to take additional depreciation and front load it to 5, 7, and 15 years that gives you the benefit now. And what I love about that is one of my least favorite things is a tax return. I can't
mhm.
stand tax returns because all that means is that you paid the IRS too much money and you gave them an
Yeah,
interest free loan and they said, "Oh, we took too much. Here's some of your money back." You
yeah.
could put your money in a 5% account on Coinbase right now and make 5% throughout the course of the year. So knowledge is power. The more that you can keep that money in your corner and make 1, 5, 10, 20% on your money, that compound is going to really help you. And that's what accelerated depreciation does. It allows you to take more deductions earlier to be able to keep more money in your corner without just spending for no return.
That's amazing. And if I'm correct, uh, those actually carry over, right? They if I get an
Correct.
accelerated depreciation, if I don't use them all this year, that means I can, use them the next year and the next year after that. So I can potentially pay zero taxes, for as long as I can, right?
Oh yeah, yeah, correct. Yeah, we've got a lot of clients that are carrying forward hundreds of thousands of dollars in losses. I just spoke with a client. I was at an event in Cancun a couple weeks
Yeah.
ago, and I spoke with a client that said, "Tommy, I haven't paid taxes in 5 years, and I've still got a couple $100,000 that I can depreciate against." So yes, that can carry forward with you, and a lot of times it'll be amortized over 15 years and that's a benefit though, because then you can go generate more income without having to worry about those taxes. So they can carry forward. That's a really good point.
Amazing, amazing, amazing. Great. Love it. Love it. I think everyone knows about 1031 exchanges, you know, and but talking about what the self-employment taxes, how does those apply for real estate investors who are wholesaling or flipping properties?
Yeah, I can tell you obviously know what you're talking about because this is where it's really important to identify active and passive income.
Hmm.
Wholesaling and fix and flipping specifically is active income that's 10 to 37%. And a lot of times what we find is when people are making $20,000 to $50,000 net or greater, having an LLC and changing it so that it's taxed as an S corporation is a major benefit because it allows them to pay themselves a salary or a distribution. But what it also does on active income is it avoids that self employment, half of it,
Mm-hmm.
which is Medicare and Social Security, right? So you make
Yeah.
$100,000 and you have that S corp election, it's 7,000 back in your pocket. And to your point, my mom always said, you can't choose your family. Tough luck. You
Mm-hmm.
can't choose a business partner that you have that all of us have, and that's Uncle Sam. I promise if you don't make yourself aware of these things, he's happy to take that $7,000. So S corp elections are great for active income to avoid half that self employment.
Mm, love it. Love it. Thank you for the golden nugget. All right. Let's move on to business credit. This is a very important topic, I think. And I just want to know, what is business credit and how is it different from personal credit when it comes to real estate investing?
Yeah, great question. This goes back to the entity conversation, right? Personal is personal, business is business. And I've never met an entrepreneur that says, I wish I had less money, right? That's yet to happen.
Mm-hmm.
And the
Yeah.
reason for it is because the more money that you have, the more funding opportunities that you create, the easier it is to grow, scale, and help more people. So to give you a visual, everyone has a legal name, a social security number, or an ITIN, and a personal FICO credit score that ranges from 300 to 850. We want
Mm-hmm.
to help people do the same thing for the business. Let's make sure you have a legitimate business name, an EIN, employer identification number, and you can build and develop a separate credit profile for your business that's called a paydex score. It ranges from 1 to 100, 80 to 85 is like you having a 750 to an 800, but it's separate. It's for your business. About 7 years ago, we had a client that came to us and said, I want to turn, those really cool Mercedes Sprinter vans, like the
Mm-hmm.
Amazon box trucks.
Yeah.
We helped him build business credit. He ended up buying a Mercedes Sprinter van utilizing business credit. And then he used business credit to completely remodel this van and turn it into a really cool camper van. And
Mm-hmm.
before he was even done, he got an offer that was a $20,000 profit. So he sold it. He did it again. He sold it. He did it again. Sold it. Did it again. Ended up on Shark Tank and got a
Oh,
multi-million
nice.
dollar deal. And it still to this day is a very, very successful business. So I don't know what you'll use business credit for. It could be marketing, it could be supplies. Just a year ago, I bought 8 acres and 2 mobile homes on a line of credit with business credit at 4% instead of an 8% credit line because it was an investment property. So, um,
Mm-hmm.
money allows you the ability to say yes to opportunities that you may say no to or be forced to say no to, and having more funding opportunities is always a benefit. We're currently getting over $4 million a month in business credit and corporate funding for our clients. So awesome, awesome thing to have and to be able to utilize for your business long term.
That's amazing. Yeah, that's a lot of money that is being given out that wasn't available before. So that's awesome. And how can I start building business credit for my real estate business if I've never done it before?
Yeah, so I'll talk to people often, Tommy, what do you mean? I've been in business for 10, 20 years. What do you mean I don't have a paydex score, right? That's common conversation that I find myself in. And
Yeah.
the reason for it is the major difference between personal and business credit. Business credit's something you have to apply for, you build, you maintain it. So the first step is DNB, Dave like Dunn, N like Nancy, B like Brad, DNB, Dun and Bradstreet.com.
Hmm.
Get yourself a Dunn's number. You can get it for free. They're aggressive marketing wise. They're going to come after you and tell you they owe you money, but you don't. Um, You get a DUNS number, and Dun and Bradstreet, Experian, Equifax, they help you with business credit. And the good thing about
Mm-hmm.
that is there's a lot of different accounts that you can apply for. So the next thing would be identifying what accounts report on a monthly basis. These are
Mm-hmm.
always changing. Good ones right now are Office Garner, Uline, Granger. But depending on when you're listening to this, don't just take my word for that because they're constantly changing and evolving. But if you apply for those accounts, you purchase something, purchase your toilet paper, purchase your paper towels, purchase something that can benefit you with the business. Pay it
Mm-hmm.
back on net 30 or net 15 terms, and it'll help you build that credit profile to where you can start getting major credit cards and eventually lines of credit that are tied to your business as opposed to you personally.
That's amazing. Um, let's talk a little bit about why it is important to separate my business and personal credit as a real estate investor, and how does that help me grow my business?
Yeah, great question. I mean, the way that I like to explain this is I am okay with my business credit looking a little bit like a roller coaster because that means I'm lending money to go make more money. I think that
Mm-hmm.
having your finances separated makes it easier to not commingle your funds, which is one of the highest reasons of audit. So it keeps you organized. It doesn't affect your personal credit if done correctly. So that I want my personal credit to stay high so that my family is not impacted by business related decisions, right?
Mm-hmm.
So that allows you the ability to lend money to go generate more income. The other thing is there's a really cool website that I like. It's called 80,000hours.org. And the premise
Mm-hmm.
of the website is that people work 80,000 hours a year on average. And one of the statistics that's in that website says that people that are self employed on average make more money than W 2 earners. That's
Yeah.
important to understand because banks are businesses and they know that. They understand that fact. So all of my business lines of credit are much larger. They oftentimes have much lower interest rates because banks
Mm-hmm.
know that I need to use business credit to generate more income. And that's how they get paid is merchant fees and interest rates. So
Mm-hmm.
being able to get larger lines of credit, more lines of credit, and have more control of interest rates depending on the investment and the situation, I think those are very obvious benefits for long-term growth.
That's amazing. And I also want to ask you, um, when I'm doing business credit, is it possible to not personally guarantee the debt? And if so, how is that beneficial for my business in real estate?
Yeah, I'm happy you asked this. I should under promise and over deliver talking about business credit. And the reason I say that is because there's a lot of funding options that are out there. For instance, we help people with building business credit, like we're talking about traditionally, but there's
Mm-hmm.
credit hybrid lines where you can get a bunch of personal credit cards that can tie back to your personal credit for your business. You can get business revenue loans, you can get term loans, lines of credit, account receivable loans, purchase orders, SBA loans, securities. The list goes on and on. There's a lot of funding opportunities. But the short answer is yes, you can do that, but it does take time. Building a credit profile will usually take 3 to 6 months for true separation. And the way that you know whether or not you've done this already is when you go into a bank and you say, I want a business credit card, they say, Julian, that sounds great. You have awesome credit. So, what's your business name? What's your EIN? And what's your social security number? That's a personal credit extension. It's still tied and guaranteed to you personally. When you're utilizing the business name, the EIN, and the actual Paydex, ITIN, or DUNS number, it's a separate credit profile that is not impacting your personal credit. So I think the benefit is being able to separate those liabilities, separate any commingling of funds, use business credit, let the business pay for itself, pay yourself from there without impacting your debt to ceiling percentage on your personal credit side.
That's amazing. Yep. So let's talk about some of the best credit products for real estate investors to finance renovations or property acquisitions or any business expenses. What can they get right now? You know, at the point in time, obviously, some people will have to work their way up, but what's available to them right now?
In regards to credit line accounts,
Yeah, yeah, the best credit products.
so a lot of the best credit products, I mean, if you're, for instance, I'll give you an example for fix and flippers. Credit line hybrids or credit stacking is something that we didn't do for a lot of years because I didn't like the way that it was presented in a lot of cases. It's presented to people as if it's true business credit, but a lot of times it ties back to your personal credit. So if you have a 700 credit score or greater, it's pretty easy to get $50 to $100,000 of credit at 0% to finish a flip if you need money quickly, right? But
Hmm.
if you go through these steps and you're truly building business credit properly with the Paydex profiles, one of the most common areas that we see is gas cards. There is a every every gas station, I swear, except for Chevron, of course, the one that's closest to my house. There's gas cards galore that you can utilize to not only pay for your fuel, but be able to build and develop your business credit. There's companies like HD Supply for tools. Uline and Granger have got a lot of different things that you can purchase that are commercial related. I bought a big old generator for my house utilizing business credit because I have a home office. That allowed me to take some of that as a business related expense. Um, there's a lot of tool. I mean, Home Depot and Lowe's, they go in and out of whether or not they report to business credit. But in addition to that, there's major banks. Key Bank's a great one right now that's giving good lines of credit. Bank of Albuquerque, Intrust. So it's not only like gas and tools and supplies, there's also banks and lines of credit that if you have the right ones based off of your score, you can use those for anything related to your business directly.
Hmm. Gotcha. Yeah, having those report to your business credit is a way to build that. That's why you want several lines reporting, right? So that
Correct.
that's always
Yeah,
good.
in the beginning, you
Yeah.
want at least three for at least 3 or 4 months, and that will help artificially bump up that Paydex profile. And that's a lot of what we do is help you understand at the time what accounts are best to apply for and why, so that you can build it as quickly as possible. We call those tier one lenders. We also internally call them accounts that nobody really wants. But that way you can get to these tier two accounts that are major banks that have 0% introductory rates and low interest rates long term.
It's amazing. Love it. So, what are the common mistakes real estate investors make when trying to build business credit, and how can they avoid them?
Yeah, the first is the one that we already talked about in assuming that just because they go to a bank and get a business credit card and their business name is on the card and they've got the warm and fuzzies, that it's actually business credit. When in all reality, it's tied back to their personal credit, right? So I'd say that's the number one mistake that we see is just thinking you have business credit when you don't.
Mm-hmm.
The second biggest mistake that we run into is people doing a quick Google search and seeing who reports to net 15 and net 30 and applying for accounts that they want. And those accounts only report quarterly or annually. You want to start by getting the accounts that report monthly. And JJ Gold is a really good one right now. Uline's a really good one right now. Office Garner's a really good one. I tell people like you're making a sacrifice in the beginning by if you go buy your toilet paper from Uline, sure, you might pay $15, $20 more, than you would have paid off of just going to the store or ordering it off of Amazon. But
Mm-hmm.
if you do that for 3 or 4 months, you're down $100. It's deductible. And now you get to go apply for these larger accounts. So,
Mm,
just like setting up your business, having a solid foundation, you wouldn't build a house on the sand. Why would you build a business any other way? Set up the proper entity, get the starter accounts that will inflate your Paydex profile so that you can apply for those larger accounts long term.
okay, love that tip. That's great. All right, so let's touch on the last of the topics here, which is estate planning, right? So, what is estate planning, and why is it important for real estate investors to have a plan for their empire, their properties, everything?
Yeah, this is there's a really if I here's a little homework that's based off of entertainment. There's
Yeah.
everyone should Google Prince estate plan story. Um, Prince, great musician, awesome music, but a really interesting estate plan story. When he passed away, he had about $100 million, but he didn't have a trust or a will or a living will, and he didn't have any children that anyone knew about. There were hundreds of thousands of people that said that they were his kid, but that was never proven. So because he had a very dysfunctional family, a lot of the money went to, I believe it was his father, um, and he had no relationship with him. So that's a celebrity, $100 million net worth. But having an estate plan is for anyone that owns an asset. That can be a vehicle, it can be a bank account, a retirement account, a home. Everyone should have a trust or a will. Every state
Mm-hmm.
is a little bit different. In most states, a living trust is the easiest way to avoid probate. And
Mm-hmm.
for me, it really comes down to two different components, and that's financial and emotional. I have stories for days that I can share with you, and I'm happy to share a couple of them. But when someone passes, like you said, death and taxes are the two things that are guaranteed, like Benjamin Franklin said. Um, Finances are always the topic of conversation and the first thing that people think about. But what I've seen that's more impactful for a lot of the estate plans that we've done is the emotional damage amongst family members. There's brothers and
Mm-hmm.
sisters and cousins and family members that don't talk for years, right? I don't know if I should say this or not, but money and sex make people act pretty weird in a lot of different scenarios. And when money is involved, even if it's $5,000, $100,000, $100 million, the principles are the same. By having a trust, by having a will, they can work as a form of asset protection, but it avoids leaving things up to chance. It
Mm-hmm.
avoids allowing the state to step in and take money for a probate process and money and things that you're working for from a legacy standpoint to going to people that you don't want them to go to. So I'm a little bit of a hypocrite. We've been doing estate plans for 12 years. I didn't set mine up until my daughter was born about 3 years ago. And full transparency, I love my wife so much, but my daughter was the first time I was like, if something happens to me, I want her taken care of. And now I've got two little girls, and I go in and I make the changes and make sure it's equally distributed. And we do thousands of estate plans a year, and the most common argument and fight that we see is more emotional based. We had one a couple years ago that um, a brother and sister ended up going to court over a super old school station wagon that was worth like $5,000. So it isn't always the money. It's keeping families intact by being able to say, my trust and my will want my old, my grandfather clock or my old station wagon is going to go
Mm-hmm.
to Timmy instead of Billy or whatever that looks like. So everyone that owns anything should have one at some point, and that's also something that we can assist with for anyone listening.
That's amazing. Okay, so you touched on a will and a trust. What is the difference between a will and a trust, and which one should I use to manage my real estate properties?
Yeah, great question. So there's a lot of different types of trusts. So you've got revocable trusts, irrevocable trusts, business trusts, land trusts. When I said earlier that every state is a little bit different,
Hmm.
I mean that when I say it. So the major difference between trust and wills on a fundamental level, trusts avoid probate. Wills, probate is still required. Trusts give
Hmm.
you privacy. Wills, there's no privacy. So there's a lot of
Hmm.
different pros and cons between the two of them, but they can really work hand in hand. When we do estate plans, we do trust, wills, living wills, and power of attorneys. And usually, for instance, how I have it set up, my trust is the beneficiary of a holding company. The holding company owns my other businesses. That way, I have privacy, I have protection, and if something happens to me, it rolls up into the trust. But in most scenarios, the trust is going to really be more important than the will. The will,
Hmm.
you can still put assets and belongings and things of that nature in it, but the trust, we want it to be there so it isn't contestable and it avoids probate.
Gotcha. Okay, awesome. So if I don't have an estate plan in place, what happens to my real estate properties when I pass away?
A lot of that will fall directly into the probate process, and depending on the state that you're in, I was born in California. That's a lot of my family's in California, and my uncle unexpectedly passed last year, and he called me and he said, if you didn't set up our uncle with this trust, it would have gone into probate. California would have stepped in and taken about $200,000 of equity that ended up getting to go to my cousin. So we don't want to leave
Mm.
that in the state's hands in the probate process, because it's expensive. It can take a long time. If anyone's listening to this and you've been through a probate, you know that it's expensive and it takes forever, and it's avoidable by having these documents in place.
Hmm. Yeah, that's a really good difference there. So let's see. If I want to include my real estate investments in an estate plan, what are the first steps I should take to protect my properties?
Great question. Yeah, a lot of times what we do when we're going through this process and we're setting up the trust and we're setting up the wills and we're setting up the entity structuring, if you have properties that are in your personal name, based off of the equity you have, based off of the interest rate, based off of the planning, a lot of times what we'll do is look at quick claim deeding those properties from you personally into the entity itself so that they can be owned by the trust or the beneficiary of the trust. And this is what I said earlier when it really is not one size fits all, because Julian, I'll use you as the example. If you own two different properties and one of them, you say, I'm going to sell this in the next 3 to 5 years and maybe execute a 1031. That's going to be
Yeah.
different than you saying, I really like this property. I'm going to keep it long term. I'm going to use it as either a cash flowing asset or a vacation property for my family in the future. Those are two different situations. So, depending on how long you plan on keeping them, what your goal is with the property, quick claim deeds are very common. We do a lot of those. And we do that so that it takes it out of your personal name for additional asset protection.
Gotcha. Okay. That's good to know. And so I've heard of all these different kinds of like strategies online, they talk about like, oh, if I ever get sued, if I ever do this, if I ever get that, the trust, it's an irrevocable trust. I'm a beneficiary. I only make 100,000. My trust really makes about 1 million a month, and so you can only sue me for, uh, the $100,000 that it shows that I make, So let's just say, you know, what are the benefits of like placing your properties into a trust, and how does it? I guess how does it simplify when the inheritance happens? So it just is that just go through? Is that straight? Like there is no contesting what is supposed to be done?
Yeah, really good question. And this is why it's important as well to understand the different types of trust. So, for instance, land trusts. Let's just talk a little bit about that to tie it to your point. Land
Mm,
trusts are a way to hold property with anonymity so that the owner can remain private, right? A lot of times we don't have the properties for a lot of our clients. Now, this isn't always, but a lot of times we don't have the trust own the properties because if you have income that goes through a trust that you're paying yourself out with, it's taxed at the highest rate over $14,000 and some change. That number changes every year. So if it's active income and you're using it and you're paying yourself out, you don't necessarily want it to be owned by the trust in a lot of cases because there's tax repercussions that you have to deal with. So that's why for
mm,
me personally, I have it as the beneficiary as opposed to the owner because I'm still in a wealth building phase of my life that I want to take those profits and generate more revenue, which I'd imagine that's where the majority of the listeners are. If you have an estate, if you're this is where the misconception of people thinking that trusts and wills are for wealthy people. Sure, if you have a trust fund, it's that much more important to pass that on to your heirs. But if you own one property, it's important to avoid the probate process and it's important to understand your tax liabilities and having that as a beneficiary. And that's where our team of attorneys breaks it down based off of each individual situation on what the pros and cons are and what's best for the investor. So whether it's owned or the beneficiary, if something was to happen and you were to die, it rolls up into the trust to distribute the assets according to your wishes. And that's the major benefit. Now, with lawsuits, you can't avoid getting sued, but you can absolutely make it more difficult on someone
mm.
between having layers of protection, having the proper business instruments in place, and making sure that you have the proper protection so that there's layers that are separating out your assets. And this is everyone's heard the saying, don't put all your eggs in one basket, right? The problem with the saying is no one tells you what eggs to put in what baskets. And that's where it's very important to be properly insured, to separate your liabilities amongst the properties and amongst the businesses so that you have the total comfort and knowledge of knowing that if a lawsuit happens on a slip and fall, it's not going to affect your wholesale or your fix and flip business because of the separation that they've created.
Gotcha. Okay, wonderful. So I now want to leave, a couple of minutes for you just to talk about some of the case studies that you've had in your company. Give me a couple of
Sure.
scenarios, different types of, versions of people, and I just want to show, what it looks like before working with you and what it looks like afterwards and what someone can expect with working with you.
Yeah, I'll give you two extremes. I'll give you a brand new business owner that hasn't generated any income, and I'll give you an example of someone that has thousands of doors just to show the polar opposites of how big of a difference this can make. Um, I was at once again a real estate conference probably a year or two ago, and a gentleman came up to me. It was November, December. He said, "Tommy, I'm not going to do anything until next year. So I'm not going to set up a business until next year." And I said, "Well, do you mind if I use you as a case study? I'll set you up with an LLC for free, and I'm going to file your taxes for free." And the reason that I did that for this particular individual is he was a good friend of a very large real estate educator in the space. And this gentleman was only making $55,000 a year W 2. He
Mm,
was single, so at the time, he only was able to take a standard deduction of about $5,400. Now, we set up the LLC and we wrote off the expenses that he had created throughout that year, startup expenses, organizational expenses. And we ended up saving him about $5,400 in taxes. Now, $5,000 is a lot of money to somebody that makes $55,000 a year. So
Mm-hmm.
even if you're just getting started, I tell people everyone in the US should be self employed to some extent, whether it's a side hustle, a side business, or full time self employment, because the tax code is 70,000 pages and it encourages investors and entrepreneurs because of how they stimulate the economy. Utilize the tax code to your benefit, even if you're just getting started. So that's the first example. Any questions or comments on the
Okay, no,
brand new
that's
investor? Isn't that pretty cool?
that's that's wonderful. So he wasn't even going to do business until next year, and because he filed this with you and you did his taxes, he was able to save $5,400 that he would have had to pay had he not filed for a business entity. And so that just shows that anyone should definitely do that because it might save you, you know could save you, $5,400 or something similar to that.
Correct.
Right.
Yeah, absolutely. And then the flip side to that coin, we had a very, very high level real estate investor that he ended up getting brought to us. We ended up meeting him. We introduced him to our head CPA. And after reviewing he owns thousands of properties. And he had a educational course as well that he sold and taught people how to educate in real estate, just like yourself. And so
Mm-hmm.
after reviewing his taxes, we had realized that all these properties never had cost segs done on them. His active income was intermingled with his passive income. He was looking at about a $600,000 tax bill. And once it was reviewed, and once we helped him understand what properties to execute cost segregation studies on, how to change the LLC so it's taxed as an S Corp, how to understand how to track the expenses and properly take the deductions that are actually business related expenses, we saved him just over $500,000 in taxes. He still ended up paying about $100,000 in taxes because it was a little bit late to do anything extra to continue to lower it. But you can imagine how much this person loves us still to this day because of the proactive planning that was happening. And that's where you can set up LLCs yourself. You can file taxes yourself. You can hire an attorney or a CPA. You can do one of these done with you type services. But I think what kind of separates prime corporate and the reason that we've experienced the growth that we have is we really care. We want to create an umbrella where if you go ask an attorney how to protect you, they're going to lean towards protecting your assets. Accountants and CPAs oftentimes are going to lean towards the path of least resistance on how to file your taxes. Neither one of those are wrong, but the truth for an entrepreneur is sometimes in the middle. So you want to protect yourself, but you want to maximize your taxes. And being able to come up with about $500,000 in tax savings for that particular individual, we're a hero in his eyes, but it was very basic things. It was very easy strategies for someone that was playing at as high of a level as he was as a real estate investor.
Okay, amazing, amazing, amazing. All right, so Tommy, tell us, obviously where we could find you, learn more about this, and we will be leaving a link down below with their information with Prime Corporate Services. So if you want to get a business entity built, or you want to talk about business credit, estate planning, or even taxes, you can. But Tommy, where can we hear more about you? And tell us, are you going to be active in our Facebook group? Are you going to you know what do you plan to do for the community? Like what's your plan?
Yeah, for sure. I think this is great. The first thing I would say is it's Prime Corporate Services everything. So follow us on Instagram and Facebook, and we try and give you tax tips of the week to keep you thinking about taxes throughout the course of the year. But to your point, we'll get a link, we'll put it in the show notes or put it right below the video, and you can click on that link, schedule a time that works for you, And the first thing that we want to do is offer to each and every one of you a free hour consultation to speak one on one with one of our advisors. If you're brand new, let us know you're brand new. If you're a seasoned vet, let us know you're a seasoned vet. Entity structure, business credit, tax, estate planning, we can help you on a one-on-one basis with all of it. Myself and one of the team members will be in the Facebook group. I feel free to shoot me a message, Tommy Thornburgh. I'm happy to help. Unfortunately, I probably will end up handing it off to one of my team members just due to my lack of time. But myself and one of our team members will definitely be in the group. We'll definitely be answering questions. So don't hesitate to reach out. And I would love to give tax tips of the month, or I would love to be able to do some Q&A with everyone in a group setting. What's so appealing about what you've been able to create, I love group learning, because if we are able to answer Q&A and if we're there to be able to answer publicly for everyone, sometimes someone else has a question that you would have never even thought to think. And I think that's the power of community, collaboration over competition. The more we can grow and scale together, the better everyone is. There's plenty of opportunity and plenty of money out there for everyone. So we'll be involved. We're offering free consultations to each and every one of you. Take advantage of it, ask questions, better your understanding, and know that we're here for you, even if it's just a simple question.
Awesome, Tommy. Thank you so much. I expect you coming on in the future and talking more about all these, topics. So thank you so much for your time. And yeah, guys, if you guys want to talk to Prime Corporate Services, go ahead. There's a free consultation. Ask them any questions you want. And again, we'll be doing more with them in the future. So stay tuned. Thank you so much.